Good morning, students. Hope all are doing well at home. We'll study about cost of retained earnings and weighted average cost of capital in today's lecture. Yesterday we have discussed about cost of equity, and before that we have a topic that is cost of debt and cost of preference shares. So basically here we are talking about cost of retained earnings and the weighted average cost of capital. First of all, I'm talking about the cost of retained earnings. Cost of retained earnings is basically retained earnings are the earnings which cannot be distributed or undistributed earnings which are available with the organization. So here we are studying about how we can find a cost of retained earnings. As we know that retained earnings are the part of capital because that is not distributed as a dividend to the owners. So basically that is a reserve in surplus which is a part of owners capital. So we'll study. So the cost of retained earnings, here the cost of retained earnings, when we are talking about the net profit after tax that is not distributed by the company to the shareholders is called retained earnings. As I have already told you, such earnings are used by the companies for future expansions. Why we are retaining the money, why we are retaining the undistributed profits? Because that can be used for the growth of the business or for the expansion of the business for future. So some people think that these earnings are free of cost and does not have any cost anything to the company, which is absolutely wrong. Because when we are talking about that is not a free of cost, that is basically a sacrifice that can be made by the shareholders. Because if these earnings were given to the shareholders, then they would be invested them somewhere in turn have earned on that investment. So this is basically a opportunity loss. So when we are talking about a further line, that is thus the cost of retained earning is the earnings sacrificed or opportunity lost by the investor. As I have already told you, if they were given to the earning retained by the company, if that are given to the investors, they can invest somewhere and they will get some return on that. So they are having some cost. So how we can proceed with the calculation of cost of retained earnings? There is example which is given. So here, first of all, here we can use the formula that is cost of retained earnings, which is equal to KE. KE stands for cost of equity, 1 minus tax, 1 minus brokerage. So in the above example, ABC Limited is earning per share is rupees 20 and market price is rupees 100 per share. Calculate the cost of earnings for the company if the tax rate is 50% and brokerage is 2%. So we have to calculate the cost of retained earnings. First of all, we must know what is the cost of equity. Yesterday I have said you verbally, we can apply one more method that is known as earning price method. So here I have applied that method. KE is equal to EPS upon MPS. EPS stands for earning per share, that we can calculate earnings available to equity shareholder divided by number of equity shares. So EPS upon MPS. MPS stands for market price per share, that is given, that is a current market price. So KE is equal to 20 upon 100. If we want to find out a percentage, so that is equal to 20%. So KE is equal to 20%. So we apply KE into the formula of KR. KR is equal to KE 1 minus tax, 1 minus brokerage. So if we can apply here 20%, that should be multiplied with 1 minus tax. Tax is 50%. 50% means 0.50, and 1 minus brokerage. Brokerage is 2%. So 2 upon 100, which is equal to 0.02. So if we can multiply, then we get the value of KR, that is 9.8% as the answer. So this is, I think, a very simple method to find the value of KR. In the last, when we are talking about weighted average cost of capital, then we have find the four values. First is when we are talking about a debt. Number two, when we are talking about preference shares. Number three is cost of equity. Number four is cost of retained earnings. When we want to find a weighted average cost of capital, then we have to include all the four components of finance into weighted average cost of capital. So we can study the capital of the company consists of various components, thus the company wants to calculate the total cost of capital. This total overall or the total cost of capital is calculated on the basis of weights. Weights are basically called here proportion. Proportion of amount should be used by equity, debt, preference shares and retained earnings. So weights of each component of the total capital. Thus, the total cost of capital is also called as weighted average cost of capital. So there are many names, so we can use it. That is weighted average cost of capital, number one. Number two is overall cost of capital. Number three is we can abbreviate it as KO, or maybe it is abbreviated as WACC. WACC stands for weighted average cost of capital, and KW, that is again a weighted average cost of capital. So what are the steps involved to find a weighted average cost of capital? First of all, we have to calculate the cost of different components like cost of debt, cost of preference shares, cost of equity, cost of retained earnings. Then we have to assign weights to each component on the basis of amount used. So ways to how we can calculate the weights. Weights are calculated on the basis of book value, or these are on the basis of market value. Both of the above together is called historical weight methods of calculating weights. So how we can move towards the calculation, how we can find the weighted average cost of capital in this chapter. So weighted average cost of capital, we can use the two methods. One is book value method, another is market value method. So here are the costs which are given after tax. Cost of different component is given as follows. Cost of equity capital is 14%, cost of debt is 5%, cost of preference shares is 10%, cost of retained earning is 13%. So here there are some book values are given, there are some market values given for equity, share capital, retained earnings, preference shares and debentures. So how we can proceed? First of all, we will move with the book value method. Here their steps are: number one is calculate the weights of different components. Number two is multiply the different weights with the after tax cost of capital. The third one is add all to get weighted average cost of capital. So here we have given weights. First of all, the amount has been given in the question. If we can proceed with the last slide. 45,000, 15,000, 10,000 and 30,000. So if we can total the whole, that is equal to 1 lakh. So if we can divide it by 1 lakh, that are weights. So 45,000 should be divided by 1 lakh, 15,000 should be divided by 1 lakh, 10,000 divided by 1 lakh, 30,000 divided by 1 lakh. So we have the weights, that is 0.45, 0.15, 0.10, 0.130, sorry, 0.30. So after tax cost of capital we have already given in the question, that is 14%, 5%, 10% and 13%. So if we can use equity share capital, that is 14% cost, and retained earnings cost me rupees 13%, and preference shares 10%, debentures 5%. If we can multiply K into W, as we have already studied in the stats, business stats in the last semester, there is one method, that is XW. We can multiply X with the W. Here we can multiply cost with the W, weights. So here is equal to KW stands for, we can multiply both the second and third column. So if we can multiply, so we get the value is 6.30, 1.95, 1, 1.5. If we can total, that is equal to weighted average cost of capital, which is equal to summation KW. So 10.75%. So that is equal to weighted average cost of capital as per book value method. Next is market value method. Here I'm just change the values to the market value. If we can move to the question again, there is a question. Equity share capital is 90,000, retained earnings 15,000, preference share capital 10,000, and equity debentures are 30,000. Market values. So if we can total, that is equal to 1,45,000. So all the figures now should be divided by 1,45,000 to find the weights. 90,000 should be divided by 1,45,000. 15,000 should be divided by 1,45,000. Preference shares 10,000 divided by 1,45,000. Debentures 30,000 divided by 1,45,000. So if we can find the weights, that is 0.62, 0.103, 0.07, 0.207. If we can multiply the weights with the cost, after tax cost, then again we will find the weighted cost, which is equal to KW. Means here we can again multiply the second column with the third column. So 14% should be multiplied with 0.62, which is equal to 8.68. And for the retained earnings, that is 1.339. For preference shares 0.7. For debentures 1.035. If we can total 8.68, 1.339, 0.7, 1.035, that is equal to 11.754%. So that is weighted average cost of capital as per the market prices. So this is the topic for today. If you have any query, then you can text me personally, or you can try the questions from the book, right? If you have any query, then you can text me or call me. Thank you for listening.